Today we increased our income to over $114,000 per year by adding to OARK and KLIP. OARK has a 40% dividend, KLIP has about a 50% dividend. They're both covered call funds that we've done numerous videos about in the past. Go check out those videos. But today was a rough day in the market. We're down 0.76. The market was down 1.5%. NASDAQ was down almost 2%. And Dow was down 1%. And this is all due to earnings, and we're in earnings season, so you're going to see a lot of volatility in your portfolio. But I see nothing but good things from earnings. One of our companies reported today, Whirlpool, and they blew out numbers. They reported last night, and they blew out earnings. And they even cited the work-from-home trends as something that's accelerating their sales because it's making people upgrade their kitchen stoves faster, and so it's leading to faster upgrade cycles. And also there's just a supply and demand issue and imbalance with the housing market, and so that's helping Whirlpool, and they're expanding their sales internationally. So even though their estimates or sales were down in North America this quarter, they're still increasing market share, and the underlying fundamentals for the housing market are strong. So that was promising for Whirlpool. You've had a whole bunch of other companies report their earnings, and even today Microsoft just reported, and they were up 5% after hours. So this all bodes well. Every sector you can think of has had a positive announcement, whether it be industrials with FedEx, which offsets the UPS weakness, or consumer staples, Pepsi, Coca-Cola, they're raising their prices. GM, strong number there. That's consumer cyclical. I mean, if you thought the consumer was strapped, I guess they're still buying cars, which is good for Ally Bank, by the way, which is a comment I got on one of my videos saying that Ally Bank was in trouble. Perhaps. I don't know. I'm going to stick with Ally Bank because it's a Warren Buffett holding. I buy and hold whatever's in the indexes and whatever Warren Buffett holds. You can't go wrong. And when they sell, that's when I sell. So we got our income up. Our debt is $237,000 right now, and that'll be paid back in 2 years because our estimated income is $114,000. And performance and value, you can see that we're up 17% for the year, whereas the Dow's up 2, S&P is up 7, the Nasdaq's up 15. Again, we're up 17% for the year because we've been consolidating a lot of our tech positions into OARK. So this position here, even though we're down 3% today, we added to it, by the way. And again, that's how we got our income up to slightly over $114,000. We added to OARK and KLIP today, about $500 each. But every $1,000 you add to these increases your income by about $400 to $500 because they're 40 and 50% dividends. So I simply added 1,000, rebalanced those shares. If I had 20,000 in OARK and I was down 500 in it today, I added 500. I've been adding to OARK on the dips. As you can see, I'm down overall in the position $1,200. So I've been adding to OARK. And KLIP, I keep it at 5,000 because KLIP is a more risky fund. It deals with Chinese covered calls, Chinese companies, so they're in the $5,000 section of the portfolio where all the other risky names are. And OARK, again, it's one of our highest holdings now, one of our highest weightings. But that's okay because we've sold a lot of other tech names to make way for OARK. So we don't have too much tech exposure elsewhere. We might as well just keep it in OARK where you're getting a 40% dividend. And we were outperforming ARK earlier today. ARK was down about 2.8%, and OARK was down a little bit less. Let's see how it finished. So OARK was down 3%. How is ARK-K? Because this is all that matters, is the underlying, is if the underlying is getting good correlation with the fund. So ARK-K was down 3.26. So we outperformed ARK. Yeah, it's up 2% after hours as well because, again, a lot of companies are reporting right now, Microsoft and some other big tech names, and I think they're blowing it out judging by the price action after hours. I don't need to delve into those results much because I don't have too much stock-specific risk besides Apple. Appley, that's our other covered call fund that has about 20% dividends. We have 5,000 in it. It's going to report, I believe, on the 28th. And what's the date today? Today is the 25th. I'm not sure the exact date, double check, but that should see some fireworks soon. And if it dips, I'm going to add on any dip because it meets important index exposure to the portfolio. Apple's a large part of the index, so it's going to be a large part of my portfolio. Same for Tesla. That's why we own Tesla, which it has a 60% dividend. And the fund was up today on a down day, which is nice to see. We're also hedged in with TSLS with 1,000 short for Tesla. So that's how we're playing Tesla. OARK, we're hedged with SARK, S-A-R-K. We have 2,000 in it right here. And it was up 3% to help offset some of the weakness in OARK. Not much, but if it continues to, to fall, we're just going to make free money on the downside here in SARK. The real money is going to be made in the dividends of OARK. Whatever losses we have here, down 6%, well, we have a 40% dividend, so we're only down 34%, really, if you just hold it for 1 year. So any money I make on the downside through SARK is just icing on the cake. So, yeah, we could go through the rest of the earnings that I've seen, the rest of the 10 sectors, but I promise there's been some good things and bad things in every sector, and that's exactly what you need for a push-pull environment that makes stocks ultimately move higher. They'll churn, but they'll ultimately move higher. Let's check out the S&P and see the action, and I think it will confirm what I'm saying, which is that we're churning in these higher high, higher low fashion, in this fashion of, you see, since October to April, you can connect the dots here on the lows of the chart and the highs, and we're in a nice channel. And this is just stair-stepping higher, but we're also consolidating sideways. I mean, you can see on a 1 year chart how much we're churning here. I mean, peaks and valleys, peaks and valleys. So now here's another peak, here's another valley. Here now we're at the next peak where the pullback is due for the next, valley, which looks like it'd be around 400 because we're going to make higher highs and higher lows. See, here's a lower, a low. You got the higher high and higher low. See, this low is higher than this low, so higher lows. And that's what you want to see in a bullish environment, in a bull market. So we're above the 200-day moving average. We've already made videos about calling the bottom numerous times in the S&P and NASDAQ. So now we're just in a healthy phase. We're pulling back. The RSI is pulling back from being almost overbought. This is healthy. To me, this is just steady as she goes. So don't feel negative or down about the market today. Just buy on dips like we did today with OARK and KLIP, and stay positive. Use the earnings volatility to add on dips and dollar cost average in your favorite names. Think long term, don't think short term. And if I've left anything out, or if there's anything you want to comment on, please mention it in the comment section below. Thanks a lot.